So another 25 basis point rate cut, guys, and the stock market is looking pretty good across the board. Not so much for the Russell. It is a little bit in the red, but the S&P is breaking out, Nasdaq is up, and the Dow is slightly in the green. So guys, we have to break down what's going on with the rate cut, my thoughts, the charts here, the indexes, stocks, the whole 9 yards. So hit the like button, make sure to subscribe, and get up to 15 stocks from Moo with at least a $100 deposit. Once you actually deposit $100, you get 5 stocks and a $30 cash reward. So you pretty much get a 30% return on that $100, and fund your account with at least $1,000. You get 10 more stocks, and overall your uninvested cash will earn up to 8.1% APY. This deal is a no-brainer, guys, and the clock's ticking, so use that link down below or go to stocksurfs.com/Moo. And with that being said, cheers. Let's get right into the video. So we're about 3 minutes away from close right now, and the stock market is looking pretty good. S&P's up 0.75%, Nasdaq 1.5% in the green, Russell's down almost 0.5%. All right, Dow's at break even, VIX is down 6%, and we broke out to about 3 p.m., 3:20 p.m. on the East Coast after we got the news, and since that point we have sold off a little bit. We can see SPY's gone from 596, which, by the way, that's an all-time high. Now we're at 595-ish, so we're not down much, really just about $1.30, about 0.25%. But overall, man, talk about a green day. We're breaking out. We ran all day. We hit a fresh high on the day and an all-time high at about 3:15 p.m. East Coast time. This looks really good. Same on the Nasdaq, which just hit an all-time high. Triple Q hit 514.30. Now we're selling down to about 513.30. But yeah, uptrended all day. Very, very good news here. So let me pull up this article here, guys. And by the way, make sure to sign up to the email list. It's free. I'm sending you all my top 3 stocks every Monday. That is in the description box, linked right down below. It's free, guys, and no spam, no BS, none of that, just straight up value. So check it out down below. So the Fed cut interest rates by another 25 basis points, which, if you guys remember, last go around, we got a 50 basis point cut. A quote-unquote, I guess, emergency cut, if you will. We got a big rate cut, which at that point, I mean, it was definitely in the conversation for a 50 basis point cut, no doubt, but a lot of people were expecting a 25. Then we got a 50, right? We got a 50. Oh my gosh, that was loud. There goes the market. that pretty much blew my eardrums out there, guys. What is going on here? Anyway, we got that rate cut. Now we just got another 25 basis point cut. And if we zoom in a little bit here, ladies and gentlemen, we can see now the Fed funds rate is in a range of 4.5% to 4.75%. Which back in earlier this year, it was at 5.25 to 5.50, right? So yeah, I mean, rates are coming down. If you have a high yield savings account, you guys are feeling that. I know I'm feeling that right now. We're not getting those juicy rates. I mean, they're still decent, they're still good, but they are coming down, and of course they're going to come down even more now that the Fed is further cutting their rates. So here we see the federal funds target rate, pretty much the data over the last 22 years. So we had a huge hike all the way up to 5.5%, which obviously is the highest the rates have been in about 15 years. Actually longer than that, pretty much 20 years almost. Holy smokes, guys. And now we're getting the cuts and the start of a cutting cycle. We're probably going to get, I forget exactly the dot plot, the data, the forward-looking data here, but we're definitely going to get a bunch of cuts to the point where I think the target for 2026 was like 3% for the Fed funds rate. Probably lower than that, 2.5% maybe. So we're going to get a bunch of cuts, guys. It's starting. And the stock market, of course, likes it. We're seeing it. And let's see, anything else worth mentioning here on. Oh, crap. Here we go. Boom. The Fed expects the benchmark rate to dip to 3.4% by the end of 2025. All right. So, okay, that makes sense. So 2026, I'm assuming, will be under 3%. That's the goal. But yeah, by the end of 2025, the Fed expects 3.4%. And now we're at about what? 4.5 to 4.75. So yeah, we have some ways to go for the next year here. So that is what's going on. Another 25 basis point cut, and we got the stock market to rally nicely all day ever since the election. Pretty much, we've been ripping like crazy. You guys all know that. And I suspect 2025 might be a good year. I'm not going to jinx it, get too excited, but I feel like 2025 might be a strong year. And, the bull market might continue. We shall see. Of course, anything can happen. The economy is still far from perfect. Don't get it twisted, guys. But things are starting to look pretty good. But we shall see, man. All-time high today on Triple Q. SPY also hit an all-time high. The Dow hit an all-time high today, I'm pretty sure, in the morning. 33 or 43, 823 points. So we are just looking phenomenal. The breakouts continuing with the Russell's all-time high not too far around the corner. I think it's coming, man. We're about 50, 60 points away right now. And, it could happen. Maybe even before the end of the year here. So we had a lot of movers, individual stocks that moved today, including JD.com. This one looks like it's poised to maybe break out again. I mean, this thing had a ridiculous rally, and I actually called it out in my email. Again, it's free email list down below. It was in one of the emails a couple weeks ago. I called it out like $26, $27. And man, that thing went in a straight line right after that, literally. And we got to 47, then we cooled off, $37. So we pulled down $10. Now it's starting to pop again. Do you guys see this right here? And we're not fully, I guess, breaking out, but I'm watching on the 20-day chart. Look at that trend line. If we get out of here, guys, JD could really start pushing more. And earnings are coming up, it looks like, on the 14th. So next Thursday morning, we're getting earnings out of JD.com. So keep your eyes on that one for sure. I think Airbnb just reported earnings. So let me pull that up. Oh my goodness, guys. Holy smokes. Are you seeing this right now? Airbnb closed at 147. It's up to 163. Oh my gosh, guys. This is nuts. So it went up 4.5% on the day. Now it's up percentage-wise about 10%. Oh man, big day for Airbnb after the bell right now. So earnings just dropped. I'm not seeing them here on the live news tab. I mean, guys, it's 4:05 p.m. right now. They did just come out. So maybe if I go on Twitter really quickly, might as well do it real quick, guys. Hold on a second. No, not Twitch. Oh my God. I still type Twitter, guys. I'm not used to it being X yet. I guess we're all going to have to get used to that. So let me see. My internet's slow today. What the heck's going on? Airbnb earnings. Usually they pop up right on Twitter. So yeah, it looks like there is a graphic here that says they missed earnings per share. So $2.13 earnings per share for Airbnb versus $2.15. So that missed a little bit. but revenue beat $3.73 billion versus $3.72 billion. So a little mixed bag there, but still, man, the stock is going ballistic. We'll see. We'll see. I mean, it's still early. We'll see how it goes. Let me go back to the charts here. Looks like, yeah, we just got the numbers here. Yeah, Q3 nights and experiences booked at 122.8 million versus 121.3. That's pretty good. So yeah, man, it looks like rates being cut. I guess it's good for Airbnb considering, I guess more people in theory, rates coming down, they'll buy more houses, put them on Airbnb. I don't know, I mean, that's like a basic thought there. But yeah, that's really breaking out. I actually called this out in my Discord earlier. That's a big move right there. And dude, this thing is at multi-month highs. So you got to keep your eyes on Airbnb right now. And pretty much, guys, that's all I wanted to cover for this video. There was a lot of green out there. AMD's moving, which it's approaching the breakout spot. So keep your eyes on AMD. I think overall this will do good or do well in 2020 or not 2025. I think it's going to do pretty well. We shall see. I just bought more actually a couple of days ago. But yeah, with that being said, I hope you all enjoyed the video. If you did, hit the like button. Make sure to subscribe. And don't forget, guys, to get up to 15 stocks for Moomoo. Fund your account with at least $100. You get 5 stocks and a $30 cash reward, pretty much $30 for free. And if you fund your account with at least $1,000, you get 10 more stocks. And overall, your uninvested cash will earn up to 8.1% APY, which, guys, that's a no-brainer. So check out the link down below or go to stocksurfest.com/Moomoo. And with that being said, guys, I'll catch you in the next one. Peace out.